So I had a buyer that's been looking for a house. I said, you know, builders are kind of struggling right now. There's actually some unfinished buildings. Like builders just stopped working on it. I guess they ran out of money or they just don't see the light at the end of the tunnel and they're just ready to hand it over to someone else for whatever the loan amount is. I've been working on one of these in the 1 to 3 million range that I found and have floated it to a few buyers. But anyways, I'm telling this buyer who's looking for a very specific property in North Nashville, and he sends me this listing right here. And of course, you know, when you read in the description, bring your creativity to finish this project. That's just bad, guys. I mean, someone started this, couldn't finish it, and now you could literally buy it for probably what they have in it. Now, I didn't reach out to this list agent. I have no idea the full story on this property, but nonetheless, there's a half finished property on the MLS right now. But there's also some that aren't on the MLS right now that are being floated. And I think that's interesting because it makes me wonder how much distress is really out there, and is the MLS data masking it? We're going to look at the data itself and see if there's any insight in the data that might be able to help us glean what exactly is happening. Are there major red flags out there that we should be, warning signs out there that we should be looking at? Let's take a look at supply overall. Okay, we're up almost 18% active listings this year, but our peak a month ago was 7,700, which means we've dropped almost 10% in our peak. On one hand, you can be disappointed. That's 10% fewer options. In my opinion, it is a little bit disappointing. I always like seeing this number go up. It obviously, the more options you have, the better. You know, one silver lining about this is you've had almost 700 houses drop out of the housing market since October, which leaves 7,100 houses, which by the way is 1,000 more than last year. 1,000 more listings than last year that want to sell their house between Thanksgiving and Christmas. They don't want to wait till the spring. They're ready to sell their house, which means that there is massive opportunity, even though contract volume, which I've told you is up almost 20%. Look in the spring. In the spring, we were at 2,835 contracts for Middle Tennessee. This is Davidson County and the surrounding 8 counties. 2,835. Now we're under 2,000. Almost a third of demand has dropped out, even though we're up year over year. Almost a third of demand has dropped out of the market since the spring. Okay, so think about this for a second. You've got 1,000 more motivated sellers than you did last year. And at the same time, we have the lowest demand of the year happening right now. I know what you're thinking. Like, Ethan, how much can you get off on a house? Well, a general rule is if you have a $500,000 house, typically you can get 3% off that house. Okay, so just generally speaking, you get 3% on a $500,000 house. That's $485. Okay, now if you are buying between Thanksgiving and Christmas, I think you can get 5%. Okay, so in general, if you're looking at a house that's $500,000, typically you get that for $485. Now I think you can get it for $475 or even less. Okay, that means you have to offer somewhere between 7 and 10% lower than list price. And it also means you need to be comfortable with walking away. Because if you like a house too much, people can pick up on it. But if you can walk away, you should be able to get a house for 5 to 10% lower than list right now, whereas normally that house would go for 3% if it's set on the market for more than a week or two. Okay, typically, you know, if something's on the market before then, it's you know, it can be the perfect house, checks all the boxes, very competitive. But in general, houses sitting right now, if they've been sitting for a while, you should be able to get 5 to 10%. Now look, not everybody's motivated, so please don't think that all houses out there are motivated. But if you're wanting to sell between Thanksgiving and Christmas, chances are you're more motivated than the average seller listing in the spring. Now we can look at prices and we can see prices in November are actually going to be touching the record at 505. Okay, we hit this year already. We hit it in May of 22 where the peak was. And we kind of just barely went above it and hit a new record this year. And now we're right back at where that record price is. But it's starting to fade, okay? Contracts are starting to drop. Price cuts are starting to increase. It's hard for me to imagine that December is going to be that much better. And when we're looking at it, like when I think about this, even though contract volume's up, even though demand is up 20%, okay, year over year, price is up. These are all strong indicators. This does tell me that we're moving into a healthier market. The supply that we have is also telling me you can be cautious, you can take your time, you can be even a little bit more aggressive on your offers. Even with inventory dropping almost 10% since the end of October, we're still up almost 20% year over year in Greater Nashville. When we zoom in on Davidson County's at 3,500 listings compared to a pre-pandemic high of like 3,200. We're like 300 listings higher than any time pre-pandemic. And by the way, guys, this is with lower structural demand. Our demand, even if it's up, is still almost 15 to 20% lower than where it was pre-pandemic. So you have lower demand and you have more listings. It creates a softer market. You know, a lot of people are like, whoa, Ethan, where's prices going to go? Are they going to go up? Are they going to go down? Look, I have no idea. People predict foreclosure crises, okay? Those can be shut down easily if the government decides that you can't foreclose on a house, which they did, by the way. If they decide to print money, home prices go up. I don't know what they're going to do with our currency. I have no idea. So if you're wondering where prices are going to go, I cannot tell you. I can tell you that supply is high. I can tell you that from a fundamental perspective, rents don't match most mortgage payments unless you are assuming a mortgage. It doesn't make a lot of sense. But from a price perspective, there are plenty of reasons the prices could go up from here. And there are plenty of reasons the prices could go down from here. Generally speaking, we're at a higher valuation than we've been in the past from a fundamental perspective. But that doesn't mean prices will drop, okay? We just don't know. The most important thing you can do is afford the house that you're buying. Make sure that you shop your mortgage rates and that you model out, this is going to be my monthly payment. Being flexible on time, shopping, and even taking advantage of off-season like November and December when nobody's shopping. These are the best times to buy from a seasonal perspective. But that doesn't mean prices won't drop next year. And that doesn't mean that prices won't go down where you're buying, even if you get a good deal. And by the way, you know I think mortgage rates could go up. So all that to say, prices are peaking in November. We're going to touch that all-time high, but they're going to start dropping. And Davidson County, crazy inventory, lots of opportunity in Davidson County, where I've been spending a lot of time here and I've been asking, and there's motivation. There are people that are open to pretty hefty discounts. So with that, I hope you had a great Thanksgiving too, by the way. And I look forward to seeing you next Saturday. Have a good weekend, guys.